Welcome back, everyone. This series, Bitcoin Road to 200K, is not just about a price target. It's a journey we're taking side by side. Whether you're new to Bitcoin or you've been stacking through storms and halvings, you're part of this climb now. And I won't lie to you, the road isn't easy. There will be rough weeks, fear, doubt, and plenty of noise trying to shake you off the path. But that's exactly why this series exists. Once a week, we come together to cut out the noise and refocus on what truly matters. No hype, no doom, just conviction, clarity, and the right mindset to keep moving forward. Because on the road to 200K, we will face setbacks, but we face them together, and we keep climbing. And when we reach 200K, we won't stop there. We'll already be preparing for the next summit. If you'd rather grow stronger through the cycle than get lost in it, hit subscribe and join the climb. Now, let's get into this week's update. Last week, we talked about how Bitcoin was holding above the 200-day moving average, a key level that often separates strength from weakness on the charts. And today, as we start the new week, we find the price trading slightly below that line. For many newcomers, that triggers instant panic, as if the moment we dip under the 200 SMA, the bear market magically returns. But if you've been through a few cycles, you know better. Throughout this bull run, Bitcoin has dipped below the 200-day moving average multiple times, only to reclaim it shortly after and continue higher. It's not a straight path, it never is. Pullbacks are part of healthy price discovery. Could we see further downside from here? Absolutely. But for disciplined accumulators, that's not a threat, it's an opportunity. Moments like these are where having a plan for your dry powder matters, not reacting emotionally, but deploying strategically. So instead of asking, is the bull market over? The better question is, how do I position myself if the market gives me a gift? When the price slips below a key level like the 200-day moving average, most people don't see a chart. They feel an emotion. For newcomers, that emotion is usually fear. Fear of losing gains. Fear of this time being different. Fear of repeating past mistakes. And that fear is exactly what causes the majority to make the wrong decisions at the wrong time. Selling low, hesitating when they should accumulate, or abandoning their plan entirely. But here's something I want you to remember. Bitcoin rewards those who can stay steady when others lose balance. In every cycle, there are moments designed to test conviction, not through massive crashes, but through doubt, boredom, and uncertainty. Quiet periods, pullbacks, and dips below popular moving averages don't end bull markets. They shape the people who will still be here when the next leg up begins. This is where mindset matters, not optimism, not blind belief, but grounded conviction, built on understanding the asset you hold. You don't need to predict the exact bottom. You don't need to catch every dip perfectly. All you need is a plan you trust, and the discipline to stick to it when the noise gets loud. Conviction isn't something you switch on overnight. It's not a motivational quote, and it's not built by watching the price go up. Real conviction comes from understanding what you actually own. The reason so many people panic at every dip is simple. They never took the time to learn why Bitcoin exists, how it works, or what makes it unique. Without that foundation, every red candle feels like a threat. But once you truly understand Bitcoin, the monetary principles behind it, the fixed supply, the decentralization, the game theory, the halving cycles, the noise starts to lose its power. When you know the asset, you stop reacting to price and start observing the process. And that's when your mindset shifts from, what if it all collapses, to how long will people ignore the obvious? Conviction is not about stubbornness, it's about clarity. And clarity grows when you learn, reflect, and surround yourself with people who look beyond the short-term chart. The strongest Bitcoin holders aren't the loudest. They're the ones who understand why they hold. Here's something that helps many long-term Bitcoin holders stay grounded, especially during uncertain weeks like this one. Build a small routine that reconnects you with why you're here. For some, that means reading a few pages of the Bitcoin Standard. For others, it's reviewing long-term charts, studying past cycles, or listening to thoughtful Bitcoin conversations rather than headlines. It doesn't need to be complicated. What matters is consistency. Even 10 minutes a week spent learning or reflecting can make a huge difference in how you handle volatility. Because when your understanding grows, your conviction grows with it, and the market's noise loses its grip. So here's a question for you, and I'd love to hear this in the comments. What's one thing you do that helps you stay focused on the long game with Bitcoin? Everyone has their own way of staying grounded. Sharing yours might help someone who's still finding theirs. As we wrap up this week's update, remember this: progress on the road to 200K isn't measured by how often the price moves up, but by how well we stay grounded when it doesn't. Weeks like this are part of the journey. They test patience, discipline, and mindset long before they reward them. So stay steady, stay curious, and keep strengthening your understanding of the asset you hold. If you do that, the market's noise will come and go, but your direction won't. Thank you for spending this time with me today. Take care of yourselves, and I'll see you next week on The Climb. If you found value in this episode, consider subscribing so you don't miss the next step on the road to 200K.